Yo, what's going on, guys? This is your boy Mac the Trader, and welcome back to another video. In this video, we're going to be breaking down my position taken this morning on US 500. All right, we're also going to compare this to the NASDAQ 100. Some individuals on my team traded the NASDAQ 100. Basically the same setup, but you guys know I prefer the US 500 markets over the NASDAQ markets just based on my trading strategy. So we're going to break down my entry that was taken, and also I'm going to show you guys a little continuation trick on how you guys can hop into these trades if you do not get the prime entry opportunity. If you are not a part of the YouTube family, what I want you to do is go ahead and hit that subscribe button. Go ahead and click that bell notification icon so you can be updated whenever I upload a new video. With that being said, let's hop right into the intro. And then let's get right into the US 500 market so I can show you exactly how to take advantage. I'll catch you guys. So before we get into the trade breakdown, you guys know I have to show you me actually being in the position. So here's a screenshot of that. As you guys can see, this is an M15 screenshot, right? So my entry was on the lower time frame, but we basically caught the entire move to the downside. And within this breakdown, I'm going to show you exactly how we did that. So the most important thing when it comes to trading the index market is time. We want to see the entry of our trade take place within a certain time range, right? We don't just want to hop into the market. We don't just want to look for momentum. We don't just want to, take random entries. All of that is fine, but what we do here at Mac Trading Academy is we have a specific time range that we play within. So once price was inside of our time range, okay, for the AM session at least, as you guys can see here, I had an alert set here, okay, and I also had an alert set here. But once I saw price was continuing to push to the upside, I was really only looking for sells. I was not really interested in taking buys. Yes, we can take advantage of buy opportunities and things like that. But in this case, just based on the market movement, we had this nice spike to the upside, swing high was created. Then sellers pushed the price back to the downside, right? We then pushed to the downside, we create this balanced candle, buyers came into the market, and what I wanted to see take place was I wanted to see buyers take out the sellers with this sweep of liquidity here, right? And then we look for short positions to take place. Because what's gonna happen is anyone that was in sell positions here, right? Price algorithm pushed price to the upside, took out all of the sellers, swept liquidity, buy side liquidity, and then we pushed price to the downside. So with that entire move to the upside, this was simply just a sweep of liquidity, a grab of liquidity in order to push the markets to the downside. Now, that's never going to be confirmed, right? Never going to be confirmed until you are on the lower time frames and you see certain things take place in reaction to that sweep of liquidity. So here we can see three different screens, right? We can see US 500, the 2-minute time frame, we can see US 500, the 5-minute time frame, and we can see US 500, the 15-minute time frame. Usually this is how my trading screen looks every single morning that I'm trading the index market, right? These are the three main time frames that I focus on. All right, now we did have a beautiful sell opportunity on Friday. Okay, that was this here, produced about 2.2%. It was NFP. Okay, so I'm not expecting a lot of people to have traded this trade here or be within the index markets during the PM session since it was NFP day. But we did, we were able to catch a pretty decent move to the downside, held this over the weekend. It's not something that I would suggest you do if you're trading futures. If you're trading futures, you need to get in and out of the market within the same day. However, if you are trading, leveraged accounts, you're trading SPX 500, okay, you can, feel free to hold that over the weekend if you would like to do so. Now, it's never a good thing to hold trades over the weekend. That's why we're not going to give, a trade breakdown of this trade here that took place on Friday, because I actually did hold a piece of my trade to, hit that target, which was hit on Sunday. But, okay, it's never really a good idea to do so, which is why we don't have a trade breakdown for Friday. But it's all good, right? Because I have one for you guys today. and it's Monday, so let's get into it. All right, enough rambling. Let's actually get into the trades. Okay, so my entry was taken on the M2 time frame. Okay, as you guys can see, both of the entries were not taken on the M2 time frame. However, right, we have one entry which was a continuation that I'll show you guys on the M5, and then we have another entry which was the the best entry possible in my opinion, which was taken on the M2. So this was that higher time frame sweep of liquidity, right? As you guys can see, we're clicking this area here, okay? And you guys can see on the M15 time frame, that is that sweep of liquidity, all right? Also on the M5, you can see that is that sweep of liquidity, right? So once price actually swept liquidity, the first time that it tapped into this area, it was 12.16. Now, you guys know me. I don't take a position during the overlap, okay? The overlap takes place from 12, okay, to 1300 hours Eastern Standard Time. So from 12 to 1, we're not looking to get into the market, and it's going to be important that you guys keep that in mind and make sure that you're focusing on that rule, okay? It will definitely save you a lot of losses, especially moving forward. The more you limit yourself within these markets, usually the better the outcome. The more confluences you wait for, usually the better the outcome, right? It's the same thing in life, right? It may be difficult to stay away from sugar, but the more you stay away from sugar, the better it is going to be for you, all right? It's the same thing within the markets. So after we swept that liquidity, right, I'm looking for my entry schematic to take place. Now, those of you guys that are part of Mac Trading Academy mentorship program, you guys have access to my index trading course. It comes with your mentorship. Access to all of my courses come with your mentorship, right? Now we have different levels of the index trading course, but we left it all within one course, right? But for those of you guys that want the institutional trading information for currency, all right, that's going to be the intro course, the intermediate course, and the advanced course, which you also gain access to as a mentorship student. So click that link in the description. Join. We'd love to have you a part. So the M2 time frame here, right? On the M2 time frame, after we sweep that liquidity, all right, we essentially see price shift momentum here, all right? Once price shifted momentum, all right, we have an imbalance here within this region, and we also have an imbalance here. Now, what I do is, okay, I take the closest imbalance because usually and sometimes price may not extend all the way to hit that end all be all imbalance. And if we're looking at the M5 time frame, which is here, all of this pretty much looks balanced on the M5 time frame. So while keeping this in mind, while keeping the M5 time frame in mind, all right, I decided to take an entry here. Okay, and if price would have, popped up here in this area, that's completely fine. I'm managing my risk. Okay, my invalidation zone is here above this region. Let me mark that up for you guys. So my invalidation zone is here. All right, which means I definitely have enough room to, play around with it. And if price wanted to pop back up here, okay, yes, I would be down, equity within my account, but I'm managing my risk properly. All right, I have a reason for the stop loss being here. All right, so I don't have to worry about that too much. So we took an entry here. All right, now to be honest with you guys, on the NASDAQ 100, we actually had a better entry opportunity, which I'll show you guys. It was very, very straightforward. Now we'll just glance over that very, very quickly at, towards the end of the video, but we're not going to spend too much time because my market of choice is the US 500. However, one of my team members, they took a crazy trade on the NASDAQ 100. It was nasty. So we'll talk about that in just a second. Right, so price tagged us in here. Very, very little drawdown. Now, if you were trading futures, all right, you would more than likely just have to take a market execution here. All right, because with, future spread, you might have not been tagged into this trade. But if you're trading, US 500 cash on a regulated broker or on an unregulated broker, with decent spread, all right, then you were probably able to get tagged in here. This morning, I took advantage of US 500 cash, all right. If I'm on the go and I'm not actually, trading on my trading terminal, usually what I'll do is I'll just, trade US 500 cash or the SPX 500 market. Pretty much my return is the exact same, except it's less expensive for me to actually take the trade, right? So there are upsides to using unregulated and regulated MT5 brokers for sure. So very, very little drawdown here. We see that price pushes to the downside instantly, and then we had a second layer of accumulation. So our first layer of accumulation was up here within this area, okay? Second level of accumulation was here. When you see that second level of accumulation, if price is not sweeping any type of M15 liquidity, okay, then you can feel free to take an entry. So here we have M15 liquidity. All right, we see a reaction candle here, all right, telling us that on the lower time frame, price may be breaking structure and maybe wanting to switch trends. All right, however, once you see price continue to push, which we saw here, all right, with this bearish engulfing candlestick pattern, then you know, okay, price is continuing to push to the downside. We are disrespecting and collecting any liquidity left here, and we're just going to take it with us along the way, right? Because we do see that sweep of liquidity. This M15 bullish candle was the reaction, all right? And then we have a bearish engulfing or continuation pattern here, showing us that price wants to continue to push lower. We also had a manipulated range form on our M5 time frame, and we had an M5 entry form as well. So to look at that M5 entry, what I'm going to do is I'm actually going to just take this off of the M5 time frame, right? And we're going to break this down a little bit more in depth, right? So we can see that price takes out this swing low here, right? We have a nice move to the downside. We leave a little bit of imbalance here, and that is the sweet spot, all right? We want to take that entry as soon as price trades back into that imbalance. Stop loss, we want to be above the manipulated range, which is here. We also measured out our manipulated range, and we targeted 3 standard deviations of this entire push. Now, like I said, this was my entry here, all right? But we had another team member take a continuation here. That's just how we mitigate and manage our risk, right? We have some people that, you know, will mimic my trades. So we have an individual that actually took another entry here, and then others will wait for a continuation or will catch the reversal to mitigate any type of position that, you know, we may have taken earlier. Doing it that way, okay, definitely assists with mitigating that risk long term, and it works for us, so that's what we do. So this is the continuation, right? We had a second layer of accumulation, which is here. We had a manipulated range push to the upside. Price continued to push to the downside, shift in momentum after that manipulated range. And then what happened? We got tagged in, and then right after, price just slammed to the downside, right? So we actually went for 3 standard deviations on this trade, which produced about 2.79R. Now, for those of you guys that are able to catch these moves, right? For those of you guys that are able to, you know, be on your charts during the AM session or the PM session, catch these types of trades, that is what is going to produce you consistent results, right? Using this strategy within the index market this morning would have produced you 6.21%, okay, if you trade the actual strategy that we teach here at Mac Trading Academy. Now, if you didn't trade this strategy, then who knows what you're able to make. But if you guys just go through the recent, you know, US 500 videos, all right, and you back test and study the moves that I'm showing you guys, this takes place every single day within the index market. I want you to be able to take advantage of the next trade. So click that link in the description, join Mac Trading Academy's mentorship program, and let me show you exactly how we trade the index markets, right? This is very, very basic information, all right? But once applied properly, it does absolute damage within the index market, and it builds equity very, very consistently, and you'll have a nice equity curve. You're not gonna have a spike to the upside and then a spike to the downside. You're going to have consistent growth within your trading account by using this strategy right here. Now, for those of you guys that don't have as much time within the index market, all right, let's say you work a 9 to 5, let's say you're not really able to, you know, stay on the charts for, you know, hours and hours at a time, that's completely fine as well, right? What we've done here at Mac Trading Academy is we've made it very, very simple for you to be able to set alerts and set entries on these trades and still come out on top. For example, trading US 100 this morning, catching 7.26%. That's 72.6% of a funded account challenge completed within, how long did this take? How long did this trade take? Let's see. Within an hour and 34 minutes. With a $100,000 funded account, that is $7,260 worth of profit. Now, you guys know I don't trade funded accounts, but that is an excellent option for those of you who want to be able to produce these results, all right? But maybe you don't have the capital just yet to do so. Actually, scratch that. It only took, what was this? An hour and 18 minutes. My bad, guys. Take profit was hit here with this spike to the downside, not here with these candles. So let's go over this really quickly. Starting off on the M15, we had a buy side sweep of liquidity after that overlap session. All right, price pushed to the upside, buy side sweep was there. We go down to the M5 time frame. All right, we do see a break to the downside here. All right, if you were taking an M5 entry, you would have been looking for price to enter here. However, that's why we have multiple entries, entry time frames up on our screens so we can get the entire picture. You had a shift in market momentum here after we had that buy side sweep of liquidity. Price pushed to the downside, a little bit of imbalance, got tagged in here. Stop loss right above this invalid area here. And take profit was simply based on an M15 swing low. All right, so you had a take profit here for maybe 5.12% and also a take profit here. Now, this would have definitely been the safer option. All right, but you could also measure that manipulated range. All right, 2 standard deviations is here for about 4.56%. You have 2.5 standard deviations here for about 5.93%, and then you have 3 standard deviations here for about 7.34%. So you definitely have options, right? Now, I know we went through that kind of quickly, but no worries. The index course will teach you exactly how to produce these results, and it's broken down in a way where a 5th grader could understand. So click that link, join the mentorship program. We actually have an 8 p.m. webinar tonight with all of our students. We're going to be going over, these 2 trades here. We're going to be going over a little bit of the index market. If you guys want to know what's coming up next, feel free to stay tuned for the next video that is going to be uploaded. It's going to be this GBP USD trade. Currently, we're floating about 12.33% in profit. You guys know I'll show you that proof and the before and after of the video that was sent to the Telegram community. And we'll break this down all the way. And then we're looking for about 24% of profit. So we'll see what happens. I love you guys. Subscribe to the YouTube channel if you enjoyed this content and this information. I will catch you on the next one. Much love and peace out.